Hello everyone, welcome to Yadnya Investment Academy. Today we will talk about few tax saving options which are not very popular and many of us do not take full benefits of these options. These options are either hidden in larger tax saving options or are the clauses which are not very well advertised. The first one is the tax benefit we get on our children's school and education fees. This option is hidden in section 80C, which we all know gives us 1.5 lakh rupees benefit each year on our various tax saving investments such as these. We get these benefits for the fees we have paid for any full-time education in India, including nursery, for our children. For example, we have paid rupees 50,000 as college fees for our child in 2016-17 financial year. Then out of rupees 1.5 lakh deduction which we get in section 80C, rupees 50,000 can be reduced as college fees expense. So we are left with rupees 1 lakh tax saving investments which is needed, which can be done in any of these and other options. Please remember, only tuition fees can be claimed under tax benefit and not these kind of expenses on education. Now we will discuss two hidden tax saving options under section 80D, where we get rupees 25,000 tax deduction on health insurance expenses by you and your family, which includes your spouse and dependent children. Apart from expenses on health insurance, you also get benefit for your expenses on preventive health checkup of up to 5,000 rupees under this section. You can get this benefit if your family's health insurance expense is less than rupees 25,000 a year and have gone through a preventive health checkup in this year. Explaining this with an example, suppose you have taken a family floater plan with premium of rupees 22,000 a year, and also you have spent rupees 5,000 on health checkup of your wife. Then you can take the benefit of full limit of rupees 25,000 under this section. Also, many of us do not know that there is a separate benefit for health insurance expenses on our parents, which gives us extra rupees 25,000 a year tax deduction, which means you can get up to rupees 50,000 tax deduction on healthcare expenses for your family, which includes your spouse, your dependent children and dependent parents. You also get rupees 5,000 extra tax deduction if your parents are senior citizen, which makes overall tax deduction limit under section 80D to be rupees 55,000. Now we are going to discuss about section 80GG, which many of us are unaware about. This section is for those individuals who are salaried but do not get HRA, or for those self-employed professionals who do not get benefit of HRA. Under this section, these individuals can claim a deduction for rent paid to the extent of rupees 5,000 per month. Just remember, it is subject to few conditions such as neither you nor spouse should own a house at the place of employment, and also you should not self-occupy your house at any other place. Now let's discuss about fourth lesser known tax saving option, that is by paying rent to your parents if you are living in your parents' house. If you are living in the property in the name of one of your parent, then you should pay rent to your parents, and there are two benefits of this. First is obvious, you will get HRA benefit for this and you can save a lot of tax on that. Secondly, your parents can claim up to 30% of tax deduction on this rental income for maintenance and repair purposes. Let's understand this with an example. Suppose you are in a 30% tax bracket and you paid a rent of rupees 2 lakhs to your parents. So you save the tax of rupees 60,000, that is 30% of rupees 2 lakhs. Now suppose your parents are in 20% tax bracket. They will have a rental income of rupees 2 lakhs, out of which they can claim 30% deduction on maintenance and repair. So their taxable rental income becomes 1,40,000, of which, since they are in 20% tax bracket, they pay rupees 28,000 as tax. So as a total family, you saved rupees 60,000 minus rupees 28,000, that is rupees 32,000 tax. Since we are on the topic of real estate, there is one more not so popular tax saving option, which is deduction on stamp duty and registration charges under section 80C. If you have purchased or constructed a house property Stamp duty and registration charges and other expenses which are directly related to the transfer are allowed as a deduction under Section 80C. The maximum deduction, of course, is rupees 1.5 lakhs as per the section limit. You can claim this deduction only in the same year when the actual expenses occur. Now let's discuss few more lesser known tax saving options in health space. Under Section 80 DDB, you can claim deduction to the extent of rupees 40,000 for medical expenses incurred for specified ailments for self and dependent relatives. Dependent relatives here means spouse, parents, children as well as siblings. Remember, this deduction is for actual treatment cost and not on the health insurance premium. The deduction limit increases to rupees 60,000 if the amount is spent for the treatment of a senior citizen, that is a person of age more than 60 years. And deduction further increases to rupees 80,000 if the treatment cost is incurred for a very senior citizen, that is a person of more than 80 years of age. Specific diseases on which you will get this section's tax deductions are mentioned here. Now let's discuss the last lesser known tax saving option, which is Section 80D and Section 80U. You can claim deduction up to rupees 75,000 for expenditure towards medical treatment, nursing, training and rehabilitation of a dependent with disability under Section 80DD. Similarly, under Section 80U, if you yourself are disabled, then you will get the same deduction of tax. In case of severe disability, the limit increases to rupees 1,25,000. These are the kind of disabilities which are covered under this section. So that is all from our side on this topic. If you have any question, please do write in the comment section below, and have a great time ahead.